Good day, everyone, and welcome to the Premium Newsletter for Tuesday, May 28, 2013. I hope everyone had a great weekend and got lots of rest. A few things I want to cover today that are pretty important. The first thing we saw before the opening bell was the home sales report. The report was very beneficial for the stock market because it proved that the economy is in fact expanding. The report confirmed home prices are up over 11% from 1 year ago. This is the largest increase seen since April of 2006. The second positive news we saw before the opening bell was the Consumer Confidence Report, which also showed bullish numbers. According to the report, consumer confidence rose to the highest level since February 2008. The stock market opened fairly high and experienced selling pressure during the trading day. After the opening bell, stocks mostly saw selling and random trading action. With the positive news that occurred this morning, the fact that there was no follow-through in the stock market during the majority of the session suggests that a bearish phase may be beginning. Keep in mind that there is divergence between the modified RSI indicator and the market, and it's still coming off highly overbought territory. So don't be surprised to see higher openings with lower closings in the next few weeks. It'll be interesting to see how we trade near the previous high level of about 1680 and how hard we will bounce back off of that level if we do trade there in the coming days. This will tell us how difficult it will be to break the high and if in fact we're entering a period of congestion, meaning range-bound trading action or a powerful reversal. As I've previously stated, I never thought and still do not think that this correction is going to be a major breakdown in price. I believe this is just a correction from a substantially overbought trading level. If I thought otherwise, I wouldn't be trading to the long side right now. The US stock market has been following the Japanese stock market recently, and due to the time difference between the States and Japan, the stock market in Japan is open prior to the opening of the stock market in the US by several hours. I monitored this regularly to see how the US stock market will open for the next trading day, and I have to say that for the most part, the correlation has been accurate about 80% of the time. I will keep monitoring this correlation and will let you know when it's no longer working. While it is working, it's providing us a great way to see how the stock market in the US will open the following morning. Let's take a look at two stocks we're currently holding. The first position is MGA. We've been holding this position for about a week or so. The stock is moving in the right direction and is fairly strong compared to the market. I don't recommend any changes to this position. Maintain the same stop loss level and target as well. After a week of holding the position, the decline in the price of the stock is less percentage-wise than the decline in the value of the stock market. This is the type of strength we want to see in a long position. My recommendation is to hold the existing position. The next open position we're holding is a short position in Pfizer Pharmaceutical, one of the largest pharmaceutical companies in the world. Notice the stock keeps falling down almost each day. The stock is weaker than the stock market. This is what we want to see for a short position, and I would advise you to leave the position alone and let it work. When stocks are weaker than the stock market, they usually drop fairly quickly when the stock market has a small correction or a decline. One stock I'm currently looking at, ticker symbol FMX, which is the largest beverage company in Mexico. The company exports to US, Canada, and parts of Europe as well. The stock has an inside day formation, and for more information about the inside day formations, please watch the video that's linked to today's premium newsletter email. The stock is in a strong downtrend, and the last 3 trading days have lower highs than the previous day. The higher lows are there as well. You can see in this example my analysis of the entry and stop loss level for this stock. The stock will be sold when it trades below 106.35. If filled, a protective stop will be placed at 109.15. I will analyze the profit target if entry is in fact triggered. That's it for today's premium video tutorial. I will update you late in the evening or tomorrow morning if I see anything new developing. Have a great night, everyone, and I'll see you tomorrow.